Here we are, another month under our belts, if you will. Christian from Verity, of course, my business partner, Jason from Outline Financial. Thanks, guys. Really appreciate you being here to have this discussion about where the market is and where it's going, because I think we would all be very surprised would you all agree that, I'm surprised to see the market where it is today, meaning the demand for low rise and even certain condominium product is still very strong. And despite all this negative news that's coming out there, at times I'm somewhat perplexed. Do you feel any differently than I do?
Yeah, I feel like it's been just going crazy since May. We're kind of defying all the odds here. I think in every month we seem like we're setting records. I realize that we are, the spring market is kind of now. So that's why we're kind of seeing everyone kind of come back in. But I didn't see it being this busy. I didn't see it being this strong so quickly.
Yeah, I admit, Jay, what are you seeing on the mortgage side?
Well, the mortgage side, I think in general, I think it's incredible to see the organization, or call it, or the consistency of the market, where you had sales and new listings slowing and at the same pace, and now they've sort of come back, and now you're seeing July where sales and new listings are now ahead of where we were last year by a significant amount. On the mortgage side, we're having record July, August closings. We don't see it stopping. The phone is ringing off the hook. So there's definitely the buzz, and there's been the demand consistently throughout.
But I think the media is picking up on these headlines, which are based on statistics. And again, you can present the statistics however you want to probably defend your position. But I'm seeing things as the tale of two very different cities, the low-rise segment of the market and the high-rise segment of the market. So let's start with the GTA-wide Toronto Real Estate Board statistics. Once a month, they come out and they present these stats. And most realtors use them to say it's red hot or no, it's not. And for the last 16 years that I've been selling, it's been nothing but red hot. So here we are. We're looking at average price growth. Sales are up 29% over July of last year. We're seeing new listings up 24%, active listings down 16%, so less supply at the end of every month than there was this time last year. Average price up almost 17%. That's pretty significant, again, over the last month. And over here, economic indicators, which is what's kind of mind-blowing for most people. GDP growth down, we know that. Toronto's unemployment rate, 13.5%, 13.6%. That's up substantially, as it is across the globe. Almost any economy, unemployment rates are up substantially. Inflation, a little below the Bank of Canada's target there. And mortgage rates, very, very low, Jay.
Very low.
How low they are.
And those are the posted rates. The actual rates are, if you're an insured buyer, sub 2%, fixed or variable. This is, we could talk about how that's contributing to this, this market, because I think it is a big contributing factor to the confidence, but I'm sure we'll get to that towards the end.
And we will dive into that. And what you see right down here, again, the GTA-wide stats, we're talking anywhere, West End, there's Etobicoke up through Mississauga, Brampton, Newmarket, Scarborough, but all of these areas, it's very hard to take these statistics and apply them to the downtown core, where it's more, there are more condominiums, or Leslieville, which Christian, the east end of the city, where you do so much work. So perhaps the next logical step would be to talk about the downtown core and what's actually happening in that segment of the market. So if I pull up that information here and we talk about what we've discussed in the past, let's start at the beginning here and focus in on the downtown core. So you guys, everyone can see here, we're talking anywhere from the beach, East York, up through, Yonge and Eglinton, Yonge and Lawrence, down through the West End, High Park, Roncy, and into a little bit of Etobicoke. And this, to me, really is the downtown core of Toronto. What we're seeing, average price growth, month of July this year over month of July last year. If you're just looking at these stats, you must be ecstatic. Like, you bought a detached home, you're up 16.5% over this time last year, detached almost 20%. Condos, you're up 5%. I mean, those are all, I mean, when you look at those numbers, you must be thrilled. And even over the 10-year rolling average, it's very strong. If we smooth out those seasonal fluctuations though, and take a 12-month rolling average, what we have, you know, still very, very good. I think most people would be very happy with these kind of returns over, you know, a 12-month period. I mean, detached homes, 7%, semis, 9%, townhouses, 4%, condos, almost 7%, which is kind of surprising. Yeah, I mean, generally all my clients feel somewhat, not concerned, but happy, but kind of confused as to why values are up so much. So let's talk about this average price chart here, this graph, where we've tried to smooth out these seasonal fluctuations. We've talked about this before. Generally in the spring and the fall, we see busier markets across all home types. So you've got your detached, your semi, your towns, and your condos. And looking here, I think what's interesting to me, from my perspective, is we're right now, the month, we're well above kind of the 12-month average, with the exception of condos, right? So no big surprises there. And this is where it starts to get a little bit interesting. So if we talk about sales and new and active listings. So to me, sales is demand, right? And right now, things that are hindering or hurting perhaps the rental market is the fact that we have no immigration. We don't have any international students coming to Toronto. We've seen rental rates dip. I mean, anywhere from 10 to 15%, kind of depending on where you are in the city. There's no surprise there. And thankfully, most of these investor clients, these landlords, although most of them are screaming about how difficult it is, but most of them bought 5, 6, 7 years ago, and buying in at those numbers, if you bought a condo, you were probably paying $500, $600 a square foot. So even at the rental rates being down 5, 10, 15%, as an investor myself, as a landlord, I've reduced the rent for one of my tenants by about 8%, and I'm still running positive cash flow. So Christian, I mean, any of your clients feeling differently?
Yeah, I mean, I will say I probably had 5 clients that I put into at least last year. And 4 of them actually are looking for a new place because they can just find the same unit for much cheaper, or more space for the same amount of money. And one has renegotiated with their landlord for like $200 off. So I'm seeing the same thing on with a lot of my rental clients. I'm asking them to go back to the landlord and see if they want to negotiate before leaving, if it's easier, but they're finding they can get at least more space for the same money they're paying today.
I mean, I'm telling my landlord clients, if you work with us, which we are happy to do, I mean, immediately it's going to cost you 1 month's rent plus HST. So, you know, you're looking at an 8% cost right off the bat. And that's without factoring in the fact that rents are probably down anywhere from 8 to 15%. So you're better off trying to renegotiate and keep your tenant there, keep them happy, keep that good relationship. And also the units that we are leasing out, that we're leasing out very quickly, are based on current market dynamics. But anyway, going back to sales and inventory. So what we have here is over this time last year, detached semis, townhouses, sales over this time last July, up pretty substantially, like 46%, 78% for detached, 47%. Condos lagging behind, only an 8% increase in sales over July of last year. So this is where we get a little bit interesting. So new listings that came to market last month, detached a 60% increase, 50% for semis, but almost 100% increase in new condo listings for last month over July of 2019. So the next slide, though, is to me more telling. Would you all agree?
Yes.
At the end of the month, this is the number of active listings that remained on the market versus July of last year, and then the 5-year and the 10-year average. So over, in comparison rather to July of last year, there were 1% fewer detached homes for sale, 40% more semis for sale, 12% more townhouses for sale, and 96% more condos. But again, going back to what's most interesting is we had a 78% increase in detached home sales activity over this time last year, and a 1% decrease in available product. So sales were up a lot, supply was down. So that's why we're seeing such tremendous price growth. And I mean, we could extrapolate from there. Are people looking to move into larger homes because of their concern about another lockdown, the desire for more space because working from home? You know, again, I think that those are a couple of factors that are playing into it. But for me, what I'm seeing here is the low-rise sector, strength, 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 right? For sales. Condos, still up, but this supply pipeline here is increasing pretty substantially. So that's why we're starting to see a little bit of leveling off. We've commented on this before. We've been commenting on this for months throughout this pandemic during these discussions that we have, which is just intended to give people accurate information as opposed to the headlines that the media and some realtors talk about without really digging in. And again, I want to clarify that great properties in great locations are still selling for great numbers, condos included. I mean, I was in a bidding war last week on a spectacular place that sold for $1,300 a square foot. But it was so incredibly unique that the demand was there. They ended up getting 6 offers. I was out on a property yesterday in the west end of the city. Guys, there were 26 offers on it. 26. It was a detached home over in, in the west end of the city.
Wow.
I mean, clearly undervalued, listed at $1 million, sold for $1.6 million. But I'm like, 26 offers. I mean, it was crazy. So, I mean, my thoughts, my opinions, moving on to this months of inventory, is that this is a rolling 12-month average. So what we're seeing here is this is when the pandemic kicked in, right? We're talking March, there was the lockdown, and we saw immediately, or rather thereafter, the fact that condo inventory has gone up. So we're the 12-month average at 1.95 months of inventory. But Jay, you made reference to this before. To move the needle this significantly is a difficult thing to do in such a short period of time. And
Absolutely.
And you highlighted the fact that the last time we saw that was right over here, which was 2008. Well, I mean, it was one of the times. There was this year leading up to, in 2010, but in 2008, we saw this very rapid increase in inventory. And that was as a result of the financial crisis in Canada and the US 12 years ago. So that's a pretty significant increase here, but all other housing types were down.
Yeah, I mean, that you would say that this is a unique time where it appears that, the pandemic or the impact of what we're going through is impacting one property type significantly more than another. The other, you could see over the past, call it 15 years here, the only time that maybe that's happened would be 2012, 2013, where we almost saw the inverse, where we saw, well, I mean, the run up of the condos, but then we saw the months of inventory of condos starting to come down. And if you recall, back in 2013, 12, 11, 12, 13, that was Maclean's Magazine or Toronto Life. It was, when is it going to burst? When is it going to burst? And then slowly those headlines have gone out. And I think what really impacted this, I guess, improvement or reduction in the months of inventory for condos was the more, the increased scrutiny or the increased mortgage rules that came into play. So it really hindered people's affordability. So it moved a lot of the people that otherwise would have been in the detached semi and towns into this condo market. And plus, you had immigration, and we have, growing population, which it was all funneling into the Toronto condo market. So, we're going through a bit of a bump, I guess, now. And the question is how far does this move up?
Yeah, I mean, that's a really good point, because you're right. In when those mortgage rules changed, I was trying to make sense of this, and I'm glad you highlighted it. It forced people from the low-rise sector into the high-rise sector. And then, it took, well, we're looking here at probably a couple of years, and then we had this precipitous drop off where the inventory just plummeted. And I remember, if I look at right here, this is, of course, when that, the government intervened in the first quarter of 2017, and we had I'm using air quotes here because I'm going to say a correction to the market that, in my opinion, really happened more in the suburbs. I didn't see a whole lot of price correction at all, really, in the downtown core. But I did hear a lot about how expensive homes were getting in Newmarket and Brampton and Mississauga and East Gwillimbury and these areas where some of my friends moved to, but I couldn't believe how expensive the homes were. And of course, they're beautiful, they're lovely, they're massive, but very, very expensive nonetheless. So this increase here though is worth noting, and I'm glad that you said that there are two different directions. The low-rise sector, detached, semi, and town can, a little blip here, but generally speaking, going down. Working from home, right now, more people wanting more space, the possibility of lockdowns, maybe, I don't know. Like there's all sorts of shifts, but the condo sector is going up. And if I look at the next chart, which we have, which is the months of inventory and these monthly fluctuations, generally following the 12-month rolling average, of course, that makes sense. However, you can see these spikes. And once again, Jay brought it up earlier, just before we started this conversation today, which was, you're right, in this peak of months of inventory in really April and May was as a result of the lockdown, where you had this level of inventory and everyone was told to stay home. So when we're doing the calculations and making the divisions between sales and active listings, it's like, well, those months of inventory went through the roof. But the big but is where we're leveling off today with months of inventory, because we are back to some semblance of normal in terms of sales activity. But you can see between February and now July that we went from about 1.2, 1.3 to 2.68. So we've kind of doubled in condominium inventory, which is a pretty significant change. And once again, here with the low-rise sector, semis, detached, row houses, we're still sitting at, a month of inventory, which is almost nothing. It's negligible. So that's why we're getting that run up in that segment of the market. But I'm finding with condos, they're still trading, they're still getting great numbers. It's the lunacy, it's those insane prices that absolutely everything was selling for is not necessarily coming through every single time you're selling a property. Don't get me wrong, our clients are still doing very well, because if you bought 2, 3, 4, 5 years ago, the values have gone up so much that even a leveling off of prices, if I were to call it that right now, people have still done very, very well. Would you not agree?
I think these charts too, they really show you why, on the low rise, why prices are doing so well and why we're seeing those, in most cases, double-digit increases, year over year. But then we're seeing, I think on your slide a few ones back, it shows condos only up, I think 8% or something like that. And I think it's because there's so much volume coming back in for condos. And I think you'll show on at the end a different slide where we think that number will even rise even further, why we think possibly there might be a bit of a, I'm not saying there will be maybe a bit of a decrease in condo sale pricing, towards the end of the year, but they're still above now. But those charts of month of inventory really just to show you why, there's hardly anything in the market to choose from. Why it just keeps getting such strong numbers.
Yeah.
One comment I was actually going to mention when we were looking at the outperformance of the low-rise segment in terms of number of sales year over year. Part of that, I think, has to be it's that deferral of the purchase, right? So we had, when we were in the COVID, in the heart of the COVID, probably the things that got impacted most, I believe, were probably the low-rise segment where people didn't list and they didn't buy. So I think what we're seeing a bit right now is a bit of catch up. So that was the big wow, right? When you saw the growth in sales, we've almost overshot it now, and we're seeing more, significantly more. The question is that sustainable? Is there truly that much demand in the market, or is this just a catch up? The positive, at least in the low rise segment, is you've got the new listings and the sales moving together. So we saw that significant increase in the number of sales because there was a significant increase in the new listings. Whereas in this condo market, we're not necessarily seeing that influx of sales, but we are seeing new listings starting to build up. So I think that's something to watch. And that's and it plays out exactly. You're looking at the months of inventory, and I think that summarizes everything and puts it into a nice single statistic.
Yeah,
I agree. And like you said, there are so many factors. You're right. Everybody was locked down for 2 months. I feel like the spring market got pushed to the summer. What I do want to finish off with today is this chart right here, which we subscribe to Urbanation and we get information from them, which they really do such a great job of focusing in on, the new construction and the resale market, providing, us with information to help us digest and make sense of it all, in addition to, having boots on the ground and being out and seeing what's really happening. For instance, 26 offers yesterday. But what I'm looking at is where the condo market is today and where it's headed moving forward. And me personally, for my investor clients who are so focused on cap rates, return on investment, getting units for the best price because rents are down, like we said, 8, 10, 12, 15%. It's hard to make the numbers make sense when you're paying such a premium. So I've been telling my investor clients, like, for the last 60 days, maybe just see what happens. If you see something great, jump on it, but don't be rushing into anything. I've been steering away from the new construction market for months and months and months. For investors, for end users, if you're willing to pay 10, 20, 30% more, but you get the layout you want, or you get the building that you want, whatever works for you, and you've got a 5, 7, 10-year plan to live there, great. But for my investors, it's a different calculation. And what I'm seeing right now is what's in the pipeline. So what we have in the pipeline are a number of condominium completions that will be coming to registration, excuse me, in Q3, Q4 of this year and Q1 of next year. So you can see a pretty substantial increase in new constructions coming to completion in the coming 3 to 6, 8 months. And without that immigration, without international students, without some of these things some of these newcomers to the country who are going to be absorbing and adding to our economy and adding to what makes Canada great, we do face some headwinds, I think, in the new construction market, because I think that this supply is going to add to the resale market. And then if that ends up resulting in a leveling off or even a trimming, and I'm not saying it's going to happen, but if it does, and there is a 2, 3, 4% trimming of price for the average resale condos, let me be clear, the people who bought 3, 4, 5 years ago can sell for 3, 5, 6% less if it came to that, and still make very good money on their properties, right? But with rents where they are today, I'm saying let's see what's happening here over the next 90 to 180 days if we're an investor. If you're an end user, if you're going to be living there, it's your principal residence. You know what happens over the next 90, 180 days if your goal is to live there for 5 to 10 years? It's not that you don't want to get the best price. I'm just saying that it may not matter as much if prices end up recovering in 12, 18, 24 months, because you're not renting it out. And like we all said before, great properties are still selling for great prices.
I've got one comment. Just I know on my screen the number's a little blurry, but I think it's important to put this in context, because I think this is a really important slide. You're looking at the next, I'm looking July to December. So over the next 6 months, we're anticipating, it looks like 13,000, give or take 13 to 14,000 of completions coming online. To put that in perspective, I think typically over the past 10 years, we usually see 15,000 over a year of supply. So, we're not only are we entering into a period of lower demand given the immigration, we're also entering a period where we're having increased supply. And you had mentioned these don't necessarily go into the resale market, because a lot of these people may decide to rent them because they're still potentially cash flow positive because they bought them 4 to 5 years ago. But you sort of see this pending wave, give or take, could be great for people trying to get in to the market. Get ready, get your ducks in a row, get your pre-approval in place, of course. But I think definitely a lot of uncertainty and interesting times to come.
Yeah, I mean, there's so many more charts and graphs that we have here, and there's so much that we could talk about for hours on end, which we're happy to do with anybody who's interested or who wants access to this information. We have stuff that's specific to the West End, to the central districts, to the East End. I mean, Christian, Leslieville, Riverside, we'll talk about that separately, but it's been on fire lately. And like I said, or like we all kind of agreed to right now, we think the next 33 months to 6 months, there could be some headwinds for the condo segment of the market. Like I said, I don't see anybody, I don't see mass exodus from that segment of the market and a huge correction in prices, but I do see some opportunities that certainly didn't exist 6, 8, 10 months ago.
Yeah, I have a few people that are looking to buy, like you mentioned before. And I'm giving them the same advice that you're giving yours. Is just wait it out. If you see something you like, great, jump on it. But if you want to wait it out a little bit, just could be a bit more in favor of pricing. It might just kind of decrease a bit. So I'm telling them just to wait it out a bit, because I think there might be more listings coming to market, especially with that chart you show with the new construction ones too. A lot of that's going to come to the market. Jay was saying.
There has been a lot of discussion too, Jay, and I don't know how you're seeing it, just because you're more on the finance side with Outline. I am seeing a lot of articles talking about how, you know, we have a lot of these stimulus packages that are coming to an end. There is a lot of pain. A lot of that pain in the employment sector has been taken on by hospitality, tourism sectors, which is really unfortunate. But there was the discussion, or I read an article about how Canadians have been actually paying off debt. And are you seeing more of that? Like, are you seeing a lot of people that are stretched financially? Are a lot of people calling you, talking about deferring mortgage payments, or what are you seeing behind the scenes?
Yeah, I think it's been a pause for people. They do want to get their finances in order. So, you know, if we've got calls where people are getting a reduction in hours, maybe if they're commission based, they're seeing their revenues decrease. So we're getting a lot of, I guess, consultative calls where it's like, you know, what do you think I should do? I have this rental property that I'm sitting on, but I don't know if I can support it. What does my picture look like if I decide to sell it and put some of this into the bank? So I think, you know, you are seeing, I think, people starting to save for a rainy day. That's probably a good thing in the long term. And then in terms of deferrals, there was an interesting article that said that basically 2 times the number of people in Canada are deferring their mortgage versus the US. So, you know, we don't know the specific number, but the big banks put out, you know, an estimate that about 16% of Canadians are deferring their mortgage currently, whereas it's about 8% of people in the US. So, you know, that's coming to an end very soon. So, you know, it's a question of, is the economy coming back fast enough to support less stimulus, less programs, and so forth? You know, we definitely saw a lot of new jobs. I think there was over 400,000 new jobs added in July, which brought unemployment rate across Canada down to 10%, give or take. But a lot of those, again, they were in the service jobs, not necessarily the higher paying long-term jobs. So, you know, we still have a long way to go. I'd say there's more uncertainty than what but I think people are realizing that, and they're taking precaution.
Yeah, which is great. I'm glad to see that, you know, people were being proactive maybe and saving up just in case, because I think we'd be naive to assume that there isn't the possibility, a very real possibility, until the vaccine exists and is distributed, that we could end up in situations where certain cities or areas are locked back down again. So those unemployment rates could go through some more volatile periods where they might spike up again. Like, I don't know, we're doing great. I hope everyone takes it seriously. And we've got a few tough months ahead of us with cold temperatures.
I've got a question for both of you, actually. It's sort of, it continues on to that discussion around new condo completions. Are you seeing people looking to assignments to offload a property that they may not be able to close on? Yeah, I mean, just to bring that in perspective, if someone's had the job, they bought this new condo 5 years ago, now it's coming to completion and they've lost their job. Unfortunately, you know, from a mortgage perspective, they're not going to be able to finance that. So I mean, we're looking with people to see what they can do. But are you seeing any of that?
I'm lucky that I haven't had any clients that have been in that situation.
Okay.
But I think it will be interesting to see what happens as a lot of these condos do come to completion in the next few months, that if we see more of that. Like I said, I guess if you want to say, thankfully, a lot of those people could assign for even like significant amounts less than what market value is today and still make very good money. So, I mean, maybe that's saving grace. I don't know, but I'm not seeing a lot of my clients who have been in tough situations like that. Christian, any of yours?
Yeah, I'm the same way, Jay. No one's reached out to me saying they have to do an assignment or that they're in trouble. So I have a few that came this year, and most probably will come next year. So I don't think they have to worry about it until next year. But knock on wood, all my clients seem to be in a good position.
Yeah.
Yeah, I think that's a really great question, because it's something that I think some people really did stretch. They over leveraged themselves, and of course there will be those people. But I want to go back to a comment I made months ago, which was once this lockdown was about 2, 3, 4 weeks in, I probably had a dozen or 15 phone calls from opportunistic buyers who were like, okay, I've been waiting for this. What can I buy? And, at that point I was like, there's nothing to buy yet. Like, there's nothing to buy. No one's discounting the prices. We're 2, 4 weeks into this. So really what we've always believed, which is we need 6 months, 8 months of this to really get an idea of like, how bad is it? How good is it? Or how bad is it? Because these lockdowns, these preventative measures that we're taking, hopefully will mitigate economic damage, and we will get through this somewhat, or perhaps less with less damage. And no one ever wants to see masses of people lose their shirts, because let me remind you that for every opportunity where somebody buys in at a low price, it risks setting precedents at a new price. So you can get that downward pressure on prices happening real quick, right? One sale at a low price is an outlier. 10 sales at a low price sets the bar at a new price for appraisals. So there are a lot of moving parts here, but I think that's a whole other conversation that maybe we should dive into during the next chat that we have. So gentlemen, thank you very, very much. Always love having these discussions. I really look forward to next month and seeing how things shape up after another, I'm going to say, crazy summer month of sales activity.
There will be.
Thank you.